Saat ini sudah hadir di studio CNBC Indonesia, Puneet Punj, Managing Director and Head of Global Financial Markets, PT Bank DBS Indonesia. How are you, Puneet?
Hi, very well. Thank you for having me.
A pleasure to have you in CNBC Indonesia.
Thank you once again.
So, this is the second day of May 2024, but we have experienced a lot for the first 4 months in 2024. Right. The geopolitical tension is still heating up, and that caused inflation is really stubborn around the world and globally. I need your opinion on it, and how is DBS Indonesia responding to this situation?
Thanks for the question, Safrina. See, the way we see Indonesia, we see it as a bright spark in Asia. We expect Indonesia to grow at, say, 5% this year, the economy. And we also feel that, the economy is going to be quite resilient to external shocks. If you look at the geopolitical tensions, I think Indonesia and the rest of Asia will be lesser impacted. That's our view. And interestingly, if you see what's happening between the US and China, I think Indonesia is going to be a beneficiary of the China Plus One initiatives that are happening at the moment. Some of the other uncertainties that we see at the moment are, this US elections, which are there end of this year. And also with, on the Federal Reserve side, we are not too sure when the rate cuts might happen, how much the rate cuts are going to happen, or there could be a surprise of a rate hike, which fortunately yesterday has been put to rest. But those uncertainties are there, and on top of it, the domestic inflation is a concern.
Yeah.
But what I also see is that both the government of Indonesia and Bank Indonesia have been taking, a lot of preemptive measures, and these are definitely going to help shield the economy.
Okay.
Especially if you see the preemptive rate hike that was done last week by Bank Indonesia. As far as DBS is concerned, for us, Indonesia happens to be a core market. For us, it's one of the 6 core markets that we have, and our focus is going to be growing our consumer wealth and our corporate franchise. Also, given our strong presence across Asia, plan is also to kind of get Asian corporates into Indonesia, get more business into the country.
Okay.
So I think we are quite optimistic about the economy. Also, from a growth perspective, for DBS, we have got big growth plans in the country.
Okay.
And on top of it, as a bank, our plan is also to kind of get the best in-class practices from the region. Could be practices, could be products, processes that we want to bring into the country and help the corporate sector, expand.
What are the data and what are the reasons why DBS is so confident about Indonesia being a beacon of hope or bright spot in the dark, that still resilient in terms of fundamental macroeconomy variables? Or tell us more.
See, a couple of things. If you look at the demographics, I think we have a massive demographic dividend compared to most of the countries in Asia. I mean, maybe India is another country which has a demographic dividend. I think the other big factor is, our natural resources. And our natural resources give us that supply chain advantage that we will attract a lot of offshore companies to come and manufacture in the country. Also, our own business houses will be in a position to, compete better with the market overseas. The demand within the country also is pretty decent. So, it's not completely, export driven, but we have a pretty decent demand within the country as well. So I think
the domestic demand.
The domestic demand, And if you look at inflation in general, I think it's still within the BI band of 1.5% to 3.5%. So I think all those factors augur well for the economy.
So everything is pretty okay. The data and the macroeconomic variables is very resilient.
Absolutely.
Thank you so much for that analysis. Puneet, I need to hear as well about your opinion, because you mentioned before that what Bank of Indonesia has decided just days ago about the rate hike to 6.25%. In your point of view, is quite a preemptive way of mitigating all the risk that comes, the uncertainties that happening in the globally. I need your thought about BI raising the rate to 6.25%?
Okay, great question. See, I think first of all, our group research was one of the non-consensus research teams, which had a view that BI will hike by 25 basis points. I think this rate hike, in our view, is prudent and is preemptive, given what's happening in the global economy and how this could impact us onshore. So I think the move is not a substantial increase. It's only 25 basis points. And this might we don't see it as a panacea for the rupiah, but this proactive move by Bank Indonesia will definitely act as a backstop. For the rupiah. In general, I think BI is going to remain pretty vigilant on dollar rupiah movements. If we see the dollar index strengthening, we expect that BI will come and use its first line of defense, which is intervention.
The first line of defense.
Exactly.
That's interesting.
And other than that, what we also feel is that if you look at the rates going forward, our view is that we're not going to see any rate cuts this year by Bank Indonesia. But the first rate cut probably is going to happen in Q1 of next year.
2025.
Yes. And as far as BI is concerned, I think their focus is going to be more on keeping the short-term rates high in order to attract offshore investor flows. But at the same time, what we also see is that BI is vigilant about the rest of the yield curve to ensure that the cost of borrowing doesn't go up significantly.
Okay. So now, given that the rate is now 6.25%, the Bank of Indonesia rate, how do you think this will impact the credit growth, and how does DBS Indonesia view this as an opportunity or as a challenge to also encouraging corporate credit growth and managing also foreign exchange funds if condition of higher interest rate era will still be happening in months forward?
So again, I think from Indonesia's point of view, I think the economy is quite robust. We're expecting about 5% growth. And given that, the elections are now behind us, the uncertainty around political stability or steady regulations is also now, are behind us. So I think the view for DBS is pretty much in line with BI and OJK, where we're expecting the credit growth to be in the region of 10 to 12% for the rest of the year. What's very encouraging to see is that in Q1 we saw pretty promising credit growth. We saw almost about 12%, so on the higher side of what BI and OJK are projecting the year. And then on the corporate side, the corporate credit growth has been pretty promising. I mean, if we look at the data from the top four or the largest four banks in the country, we're seeing the corporate credit growth in the region of about 14 to 22%. And many of them have capex plans lined up, expansion plans lined up. So I think we are quite optimistic that I think this 25 basis points preemptive rate hike is not going to kind of hamper.
Still a double-digit growth for the credit in Indonesia, and then in the region.
In Indonesia, in the region, again, as I said, Indonesia happens to be the bright spark. So, I think in the region, I think it's again going to be a flow of credit into certain countries where definitely, we are seeing more growth. And from a growth perspective, I mean, definitely Indonesia stands out in the region, besides maybe India.
Thank you so much, Puneet, for that. And I need your thoughts as well about the current trends of Rupiah movement. We are currently, Rupiah is in 16,200 Rupiah per $1 US. And it is quite the worst level in 4 years. Yeah, we reached this level back in 2020 when the pandemic hits. I need your thoughts on this. Do you think this will be bad situations for the Indonesia's economy? And is the current trends of the Rupiah movement as well is in line, or it's very consistent with the fundamental conditions?
A great question. See, I think first we need to take a step back and see, how the other emerging market currencies are behaving. Actually, emerging market currencies have not been performing well. They have most of the major emerging market currencies have actually weakened in the last few months. So this is more a trend of dollar strength rather than any specific currency, being picked for its weakness. And why has dollar strengthened,
Yeah,
as we
the dollar index is super strong.
Absolutely, absolutely. So, actually, if you see in the last, if you see, year to date, the market was actually factoring in almost 150 basis points of rate cuts. And this is based on Fed fund futures. So this was back in January. And today, if you see, the market's factoring in only about 35 basis points of rate cuts, for the rest of the year. All driven by, the inflation being so stubborn. The path to 2% looks difficult, quite challenging. And on top of it, we are seeing a very strong job market. So, all of this is actually keeping has kept the dollar rates pretty high. If you look at the 10-year US Treasuries, they're now at about 4.6.
Yeah.
In just about 4 or 5 months' time, the US 10-year yields have actually spiked by almost 70 basis points.
Okay.
It's quite substantial. And actually, that has actually shrunk the rate differential between US and emerging market and resulting in, an outflow of dollars. So actually, as we look at Indonesia, Indonesia is just in line with most of the other emerging markets. We also acknowledge the fact that, a sharp drop in the currency is something which no central bank likes. And for that reason, I think, BI has taken this preemptive
do
measure.
this preemptive measure
Absolutely.
again.
But we also see that, in the last, the recent depreciation in Rupiah is actually more of a catch down play with the other regional players, with the other regional currencies. Because if you see over the last few years, actually Rupiah was an outperformer compared to many other emerging market currencies. So I think it's more of a catch down play, but I think BI is going to remain vigilant. I think for them, as I said earlier, I think they will continue to use the first line of defense needed. This recent rate hike is definitely going to help keep the currency, range bound. And I think with the short end of the curve, actually having moved higher, I think we eventually expect foreign investors to come in.